show usefulness for execution, and I'm talking about here how this can help us execute. So to see some examples, what it can do is it can improve some confidence on some trades for us, and how it can do that is by following these metrics, which I'm going to talk about here. So let's say, for example, we are trading end of October areas, and coming into this week, uh, let's go there. Let's see this. And coming into that particular week, the value area low for the previous week was around here at 4010, and the week opened around this level, which is 4060 or 70. At this point, we were kind of getting resisted at the point of controls. At the opening price was just below the point of control of the last previous week, and it got rejected. If we see this, we got confirmation of that rejection. That's a very good trade. That TPO can add additional confirmation as for us, because at the start we might not get it because the 100 MA is above the 200, but still it works and it does give that downside. Let's say even if we don't get that, the next opportunity comes when the value area low is broken, which is at 4010 as we discussed, and when it breaks that, there are two rejections happening. One is at this point from this 100 MA, and even better one at a later point at this 200 MA. This is a very good rejection, and while the MAs are not clear, the price was also flattened. If we look at this is a block kind of structure, which would help that could confuse us as the support or resistance. But for this, because we have the TPO confirmation, it can give us that resistance, and it can work additional confirmation along with the MA to take the short trade, which obviously, let's say, works very well and just goes straight down. Even if this is not the case, let's say we get other opportunities like this, which could be leading to much better trades than in general. So let's even if we fast forward to the later weeks as well, uh, we see the TPO continuing printing. So this current week's TPO is always live, so and changing. So it's best to look at the last week's like fixed key point of controls and fixed value area highs and lows, and follow that. Not follow the current week's one, because current ones are all currently being printed and might not be that accurate and might change. So let's say at this point our resistance was here, right, at this level, and we saw this rejection here and again that rejection here, and price kind of following that on that resistance basis, and time again at the right at the tip of it, it gets resisted and follows through, resisted and follows through, and this, after a lot of testing, it finally breaks out and goes above that and tries to move up towards the upside. And then when the week closes, we'll have a new point of control, which will be from around these levels, and we will see how that that can create the new levels. So yeah, like I was saying, these new levels were created, value area highs and lows. So this one and then this one, these levels were created, and if you look at then these levels, there's a straight rejection here and then confirmation here, and how we can trade that on the 5-minute basis as well. Let's say this is the levels that these are the levels that are created. Let's remove this because it's old. When this rejection happens, we don't have again much clarity on the price action. If we see the price action without the lens of the value areas, this is a flat kind of up and down price action, and price breaking the MAs a lot. So we don't have confidence on either side. But because we have this resistance, we kind of are a bit bearish and we want to short because it's rejecting from the value area highs. So we can plan short, and when it finally goes and settles below the moving average levels, which is here, this is our confirmation that the price is turning bearish. And when this breakdown happens, all the MAs are already below the 200 MA. So the short time frame trend has also shifted, and when that happens, we can short, and that gives us a really nice trade. And that trade just continues towards the lower level. And when it does that short trade it becomes something that goes past the value area lows, and in that case we see another range forming near the value area lows. Again, an environment where we would be really unable to trade, unable to decide where the market is going. But because we have that value area low support, we know that the price can form a structure around here and then try to move up. And it does. When it does go up of the 200 MA again on the 5 minute, that kind of becomes bullish. But that's not our trade. That's our confirmation. At this point, we are confirming at this whole scenario. We are confirming that the market has turned bullish after taking support from the value area lows, and in that case gives us bullish ideas for the trades. Because if we look at this without the lens of the support, this is a whole flat area, this is no trading zone. Because we have the support idea, when it does come to that confirmation or this confirmation or this confirmation, all of these potentially give us trading opportunities, which eventually turns into something much bigger, like goes and up again, like continues towards the upside, and eventually reaches close to that value area high as well. And if we just continue on that vein, we just see that before the week closes, this is on a Friday, it almost hits the value area high and sharply rejects to give us one final short trade before closing inside the value areas. And then when the market opens on Monday, in the morning itself it breaks out and then goes on this merry run. So when this something like this happened, last week's value area low or value area high being broken within the Monday morning, Monday Asian session, that's a mega bullish or bearish signal. So it can happen on the upside or downside as well. So that's a very strong signal of upside and downside continuation. Not that we need to trade that or need to trade that breakout, etc. We could just trade the shorter confirmation, smaller confirmations, which we would not trade because we are far away from the 100 MA. This is a far away from 100 MA zone. Normally, we would not trade this. We would only be trading this kind of environment. Also, this is not very clear. This is on the MA basis, we might not do that. And we did not because the confirmations were not clear. But because the signal was that strong from the value area high breakout, we might be able to catch some of these because we have a narrative bullish bias on the asset, and it generally continues till Tuesday night, and it did kind of, but it closed around Tuesday afternoon itself. It did not go further, and only then went further second half of the week, which is Wednesday US session, and just continued that bullish momentum. So those kind of bullish momentum, like we are far away from the last week's value area high, and that narrative continued. When this kind of thing happens, we can take that, we can try to capture the momentum on the upside, because that's the market narrative of the week. Now, coming to the current week scenario, we have a very bigger range. So generally, if we look at this range and this range, these are two different kind of ranges. This range is almost 160 to, yeah, almost $140 worth of range, but this range was smaller, like $40. So when there is a smaller range of value area high and low, there is a potential for breakdown or breakout. So this is contraction zones. When this happens, price tends to form a breakout or breakdown structure. We see this time and time again. These are long ranges, so breakout doesn't happen. Price trends in range, but when value area thins, like it's a thinner range, there is a potential for higher breakout or breakdown, and this happens many times. Smaller range breakout happens. Smaller range, even smaller range breakout happens. So larger range, not that much breakout happens next week. Next week is contraction. So this is a bigger range, next week is a contraction. This is a smaller range, next week is slightly bigger. So something like that continues, and that can be denoted from the value area high and lows. So what we can expect is the price to be narrower than last week, maybe on a $60 to $80 range maximum, and value area to be that. There might be wicks up and downside, but overall we can expect something like a block like this. Sorry, maybe a block like this, smaller range block, price forming some sort of structure here, and trading inside that. Then again, breakout can happen or breakdown can happen. So contraction could be there. So these are the sort of things that it can tell us. And since we held that value area low of the last week or towards the close, this becomes a very important point for us, for the narrative of the week, 4,667. And obviously, we are not expecting this to be hit, but this is also a key important level, 41922 to 4196, because 4196 is also the volume point of control, and we also have this other POC, price POC at 4129. So I'm expecting the price to be in range in between this area not go to that area. So yeah, that's something we will see. But yeah, these are the sort of things that how the TPO can help us execute the American strategy itself in a much better way. So that's why I suggested this. And yeah, let's please have a look and let me know what you think. I think it's a very interesting thing in any case. And yeah, thank you.